when you do day trading, you want to wait for the signal bar to come and then start to trade. That is because the signal bar is the start of the trend. And among all the signal bars, the best signal bar is the trend bar. What is a trend bar? Basically, the trend bar has a body larger than 60% of the whole candlestick. It means the direction of the market, and it also means the start of the trend. Here is an example. We have a uptrend, pushback, and then we can see this is a very good trend bar because the body accounts over 60% of the candlestick. And then you can see the following, we have another very strong bull bar and a bull bar, then it pulls back. So this trend bar means the start of the leg up, so this is the good opportunity for you to trade to the uptrend. After the pullback here, you can also see that this bull bar is also a very good signal bar. The body is roughly 60% of the candlestick, and then goes up and then pulls back, and also this bar, roughly 60% of the whole candlestick. So you can see that the trend starts with a trend bar. For comparison, let's take a look at a non-trend bar. So basically, this bull bar has a body roughly 20% of the whole candlestick, and the whole candlestick is smaller than this trend bar. You can see that also it leads to a good trend, but after you enter the market, the next bar is a bear bar, so it didn't go up right away. So the difference is that the trend bar has a higher probability that the trend will start right away. Another thing you will notice is that if you enter by this bar, you have to wait another bar before the trend goes up. However, if you enter at this trend bar, though it goes up directly, but your entry is higher. Here's another example. The market goes up, pulls back. If you choose to enter at this non-trend bar, the body is very small, like 10% of the whole candlestick. You can see that when you enter the market by the next bear bar, but it goes down. It didn't go up right away. However, if you choose to enter at this trend bar, you can see the market goes up right away with consecutive bull bars. So this entry is lower than this entry, so that means you have more profit. In general, the trend bar gives you the highest probability that the market will start trending. The second type of signal bar is when there are two consecutive bars with the same direction. These also means the start of the trend. So to qualify for the two consecutive bars, the first bar is weak, so it is not good enough for you to enter the market. And then the second bar is at the same direction but stronger. So combining both bars, you will see a very strong bar at a higher time frame that you can enter at the top of the bull bar or the bottom of the bear bar. Here is an example. The market goes up, pulls back. And then you can see that this doji bar is very weak. The body is very small. So it's not a very good signal bar for you to go long because this means the market paused there and the buyer and the seller are waiting to see which one will win the market. So when you see this bar, you want to hold your position. That is because after this bar, the market could go either way, either up or down, and depending on the strength of the direction. And then later on, when you see this bull bar, it's a very good signal bar. And then combining with the doji bar together, you can see they form a very strong bull bar at a higher time frame. So this chart is 5 minutes. If you go to 10-minute chart, you will see these two bars combining together is a very strong and a good signal bar. So that's why you can enter at the top of this second bull bar. Also, for these two consecutive bars, it doesn't have to be an inside bar for the second bar. As long as the first bar is weak, the second bar is strong, so combining together, it is a strong signal at a higher time frame. We'll have videos on the inside bars later. The third type of the signal bar is the inside bar with the same direction. So because inside bar with the same direction most of the time will show the start of the trend. For the inside bars, basically the first bar is already very good signal bar, but it is not triggered. And then the second bar should be an inside bar, but with the same direction. If that is the case, you want to enter with the inside bar rather than the first bar, because you're going to have more profit. Let me show you an example. On this chart, let's take a look at the setup. First, it is a V reversal. So basically here, this high is higher than this high, or even if you see this high is higher than this minor high. So this is a V reversal setup. We wait for the pullback. So here comes the pullback with 2 consecutive bear bars. Then when you see this bull bar, it is a very good signal bar. You want to put your entry at the top of this signal bar. However, you can see the next bar, it didn't trigger the entry. Instead, the second bar is an inside bar. So here you can enter at the top of the second bar, the inside bar. So basically, if you enter at the top of this inside bar, you're gonna have a lower level as the entry. So that means you have a more profit than you enter at the top of this bar. So this is the characteristic of the inside bar as a signal bar. The fourth type of signal bar is the inside bar with the opposite direction. Basically, this situation also will lead to good trending. Basically, for the 2 consecutive bars, the first bar should be a very good signal bar already. So you want to enter at this good signal bar. However, the second bar is an inside bar. It doesn't trigger your entry, and also at the same time, this inside bar is with the opposite direction from the first bar. So if this is the case, you want to still keep your entry at the first signal bar rather than enter at the second inside bar. Here is a good example. The market follows the bottom trend line very well, and then it breaks the bottom trend line, and then we wait for the pullback and signal bar to enter the market. After these 2 consecutive bull bars here comes a very good signal bar as the trend bar, because the body accounts over 60% of the whole candlestick. So we want to put our entry at the bottom of this candlestick. When the market goes below this entry level, it triggers our order. However, you can see the next bar is an inside bar. This inside bar didn't trigger this entry level, and also at the same time, it has the different direction with the bear bar here. Basically, it's pointing up. It's a bull bar. So in this case, what you want to do is do not just enter at the bottom of this bull bar, this inside bar, because there is possibility the market will go up. Instead, you want to wait and keep your initial entry level at this level here, and then wait for the market to go down to trigger it. So you can see the next bar is a very good and strong bear bar. So this bear bar triggers your entry level, and then market goes down. How to choose signal bar? Number 5, non-trend bar. Signal bar normally is the start of the trend. For the non-trend bar, there are 3 things. The first is the body is less than 60% of the whole candlestick. And the second, the probability of the trend start is low with the non-trend bar. The third is that a lot of times after the non-trend bar, you can see some small wave pullbacks later on. Here is an example. So in this chart, we can see we have a level, and then it's breaking this level. We wait for the pullback and then the signal bar. Here comes a first bar here. This bear bar, you can see the body accounts 58% of the whole candlestick. And it is leaning at the top of the candlestick, the body. If you enter here, you can see it's triggered by the next bear bar. But later on, the wave will be coming up to test the previous pullback here. And then this is not a very good start of the trend. Then after the market goes down a little bit, we see another pullback with this bull bar, and then the next bear bar. The body accounts 32% of the whole candlestick, and if you put your order at the bottom, you can see it's not even triggered, and then there are 2 consecutive bull bars after it. So this bear bar is not a very good signal bar. And then later on, we can see there's another one. This bear bar has a body of 85% of the whole candlestick. So this is a trend bar, not a non-trend bar. You can see the market goes down by 2 other consecutive bear bars. So you can see this as a start of the trend. After the market pullbacks again, you can see the next bear bar here. The body is 56% of whole candlestick, but the body is leaning to the bottom of the whole candlestick. So this leads to trend. It's a start of the trend. And then the next bear bar here, you can see the body is 46% of whole candlestick, and the tail at the bottom is big. So combining with the next bar, which is a hammer, together these 2 bar can be good signal bar. So you can see that next bar, this doji bar, you can enter the market by putting your order at the bottom of this hammer. So by these examples, you can see that basically the trend bar will have a higher probability leading to the start of a trend. Non-trend bar has a lower probability.